Dominick, let me kick it off with you here. What are you expecting in terms of driving this market? Why such weakness at the beginning of earnings period? Yesterday down in the triple digits, and we're looking at a decline now of 265 points on the Dow.
So we've had a very nice bounce off of the September lows, and the market basically recovered pretty much what we had lost during September. But I think now the markets are really starting to focus on two things: this virus that simply will not go away and obviously is getting worse on a day-to-day basis. And the second thing is there at least the possibility of a blue wave coming in the election. And if that were to happen, what does that really mean from an economic perspective, global economic perspective? Those two things are starting to worry people, and I think people in general, investors in general, are trying to get defensive and prepare for it.
So what do you want to do now going into the election? Do you sit on the sidelines, sit on cash until we know what policies are going to drive the day, or do you buy into some of this weakness?
Well, I think in the short run, you look at your winners. I mean, if you've owned some of these large company tech stocks, if you've owned healthcare year to date, you've done very, very well. And with the prospect, at least, that you could have a higher capital gains rate next year, why not harvest some profits, raise cash a little bit? We're sitting with about 10% cash. I don't want to go into the election with anything less than 10% cash. And if we get some volatility after the election, that would be, I think, a great buying opportunity. But you have to at least contemplate that we could be looking at higher taxes next year, that regulatory events are going to be much, much stricter next year, that we could be looking at environmental and energy impact with a different administration in Washington. So these are real important issues that you have to start focusing on now. You cannot wait till January to do that kind of work.
Yeah, I've been looking at the capital gains tax, and the fact that you're going to see that capital gains tax go from, 23% all the way up to 39.6 would indicate to me that that's going to be the thinking after the election. If investors are sitting on a lot of gains, they're going to say, I'm going to realize those gains now while I can get a 23% tax rate rather than 39.6 next year. In that vein, if Joe Biden wins, do you believe we'll see a market sell-off after Election Day?
Well, that's what scares me, Maria, is that people are going to wait till after the election and then make those decisions. We could already have at least a 10% pullback just in that contemplation. So why not harvest some profits now before the results of the election are there? And then you can always buy back in. There's never anything wrong with harvesting some profits. So we've had some good winners in our portfolios. It's time to put that money on the sidelines and be prepared. I think we're going to have a pullback. I don't think it's going to be dramatic. I think 10% is reasonable, and I think that does give us a buying opportunity for next year. But you don't wait till after the storm hits to start boarding up your house. You do it ahead of time.
Understood. Dominick, good to see you this morning. Thanks so much. Dominick Tavella this morning.